How to remove hard inquiries from your credit report. This is a question that's asked to me all the time by my clients. How do I remove inquiries? In this episode, we're going to go through what that looks like. In this episode, we're going to discuss the difference between hard inquiries and soft inquiries. We'll discuss why creditors use hard inquiries, and then we'll finish up by guiding you through the steps involved in removing fraudulent inquiries from your credit profile. All right, let's get to it. Okay, inquiries. People are absolutely obsessed with inquiries. Over the last couple of years, this has been the most common question that I get from just about everyone, and it's all over the internet. It's like the holy grail of what it looks like for people to work on their credit. And the reality is that inquiries really just don't account for much. They account for 10% of your overall credit score. An inquiry really only dinks your credit for approximately 3 to 5 points. After 6 months, you get most of those points back. After a year, there's no impact to your credit, and then the inquiry stays on your credit for 2 years. Now, if you're in the market to buy a home, the reality is that your mortgage lender only looks back approximately 4 months in most cases. So when the client's coming to me and they're trying to get a home loan and they think it's the inquiries that are causing the problem, it's usually not the case. There's usually a whole lot more going on than just inquiries. Another important addition to inquiries is that the scoring algorithm actually allows you to shop rates. And what that means is that you have a 45-day window to shop rates for an auto, to shop rates for student loans, and also to shop rates for a mortgage. Now, why is this important? Because again, my clients come to me and they went to purchase a vehicle and they had the auto dealership that actually pulled their credit 5 or 10 different times looking for the best deal for them. And they come to me and they say, hey, this happened, and that's the reason why my credit score really took a nosedive. And the reality is that if we're dealing with the FICO scoring algorithm, they actually allow a 30-day grace period before that inquiry even impacts you. And then once the inquiry impacts you after that 30 days, you have that window to shop rates. So a lot of clients think that there was fraud that happened when they went to the dealership. And the reality is that they put an application in with that dealership, giving them permission to pull credit as much as they needed to find them the best deal. Okay, so that's what hard inquiries look like. Now let's talk about soft inquiries. Soft inquiries are when someone pulls your credit when you're not seeking credit. So in other words, if you were trying to get a job and they pulled credit, that would be considered a soft inquiry. If you're trying to get insurance and they pull credit, that's considered a soft inquiry. In almost all cases, if you have a credit card, let's say you have a Capital One account. If you've had that Capital One account, let's say for a year or 2 or 5 years, Capital One is constantly performing soft pulls on your credit profile. They are gauging how your overall credit looks. You are an investment to them, so they're constantly looking at your credit profile. That works the same way with Chase and Citi and all the other financial institutions. If you pull your credit report directly from the credit bureaus, you're going to be absolutely amazed at how many different companies are pulling your credit profile. Whereas you may only show 5 hard inquiries, you might show 30 or 40 soft inquiries. Now remember, soft inquiries don't hurt your credit, so don't be alarmed, but it does make sense to look directly through the bureau to see who's actually looking at all of your information. Another area where a soft inquiry is pulled is when you're getting anything that's considered a pre-approval. When you get those pre-approvals that are sent to you in the mail or by email in some cases, all of those financial institutions and banks have actually done a soft pull on your credit profile to determine if you're credit worthy. Now, the soft pull is going to give you a general idea of kind of where you stand. They're going to invite you to go ahead and sign up for that pre-approved offer. And then once you accept the offer, they're going to actually perform a hard pull. 90% of the time, you still qualify for that pre-approved offer, but sometimes when they pull credit, they find something that doesn't fit their business model and they will decline you. So you might ask the question, if soft pulls on your credit don't actually affect credit, then why not just use that instead of a hard inquiry that causes damage and makes my credit score go down. The main reason is because soft inquiries don't give the level of information that hard inquiries give. Soft inquiries are going to give generalized information to the creditors that let them know if you're in the bottom of credit, really in the middle of credit, or on the top of credit. It might be 3 different tiers or 4 different tiers that soft inquiries will indicate. These types of inquiries don't give us a full picture of a person's behavior. It only gives us a fast snapshot. Obviously, lenders are going to use a hard inquiry to see the full picture. They're going to see your payment history. They're going to see all of your collections and your charge-offs and all of your issues. They're going to want to deep dive into your actual credit profile before extending credit, and hard inquiries are the only way to do that. So creditors get a little bit anxious when they see too many credit inquiries, too many hard inquiries on your credit profile, mostly because somebody who is pulling their credit consistently month after month, and maybe even multiple times month after month, is going to be considered high risk. Why are they seeking credit in such an aggressive fashion? Okay, so there's a couple of scenarios where inquiries may appear fraudulent, but they're actually not. And one of those is what I had just discussed, where you go to an auto dealership and they pulled your credit 5 or 10 different times looking to find you the best deal, but you actually agree to that in the application at the dealership. The same thing can happen actually when you apply for a mortgage. The mortgage lender, depending upon who you go through, can actually pull your credit multiple times, especially if it's a broker trying to find you the best deal. Another scenario where an inquiry may show up on your credit profile that you don't recognize is where sponsor financial institutions are responsible for retail store cards. And what that looks like is you may go get an Old Navy card. On your credit profile, it's going to show the sponsoring bank and not necessarily the retail store card that you purchased it from. In other words, your card may say one thing, but the actual bank is going to be something different. This is something that we see all the time on people's credit reports. When we go through their credit profile to discuss their situation specifically, I may state out something like, hey, this Capital One card went into default, 2 years ago, and they're saying, well, I never had Capital One. Well, the reality is that Capital One sponsors Kohl's, right? So it's actually going to be a Kohl's card, but the client doesn't recognize that it came initially from Capital One. There's lots of these sponsor financial institutions that will deal with dozens and dozens of retail store cards. Another big one is going to be a company known as Synchrony Bank. They sponsor probably, dozens and dozens and dozens of retail store chains. Okay, before we get on to the next segment of this video, please like my video and subscribe to my channel. I'll be working hard to bring you one video over credit, lending, real estate, and other relevant personal finance topics. Okay, so you've gone through your credit report and you've found several inquiries that are on your credit profile and they don't fit into any of the categories that we've recently discussed. What is it that you can do about that? The first thing to recognize is that inquiry is legitimately not something that you recognize. You have every right to work towards getting that removed from your credit profile. Now, conversely, if it's an inquiry that you are aware of, in other words, you know how the inquiry came about, getting that inquiry removed from your credit profile can come with some risk. The first risk that it comes with is that if you dispute an inquiry because you just don't want it to be there and you think you're going to get some points because of that, it can cause problems with a current creditor. As an example, going back to the Capital One example, if you have a Capital One credit card or if you have a Capital One auto loan and you dispute a Capital One inquiry stating that it was fraud and that Capital One pulled your credit without your consent, there's a real good possibility that Capital One's not only going to call the car note, but they're probably going to also close your credit card as well. And the second risk that goes with disputing an inquiry is that you're actually saying that financial institution pulled credit without your consent. Now that's a big legal issue for them. In many cases, when you're trying to build out your credit, you're destroying those relationships with those financial institutions. Even if you don't have a card from that financial institution, in many cases you can get blacklisted. In other words, you don't have a card from ABC financial institution, you pulled credit, they denied you, and now you've said that they pulled credit without your consent and tried to get the inquiry removed. In many cases, they will not do business with you in the future. And the assumption is that if the credit was pulled fraudulently, then the person that pulled the credit must not be who they say they are. Just remember at the end of the day that inquiries account for very small amounts of points, 2, 3, 4, 5 points at very best. So in many cases, it's a lot of work for really, hardly any bang at all. So how do you get legitimate inquiries off of your credit where you did not authorize them to pull credit? It's really simple. All you have to do is call the original creditor, talk to their fraud department, and tell them that, listen, I never applied for credit with your company, and there's an inquiry from my company on my credit. Please remove it. The next thing that you want to do is you want to reach out to the credit bureaus, all three of them, and say the same thing. Tell them, listen, this is a fraudulent inquiry. I didn't authorize this. Please remove it from my credit profile. Super simple process.